Bitcoin is it's a network, right? It's physically, literally and physically a network. It's a network of nodes that secure a blockchain that enables Bitcoin to be a better form of money going forward. And therefore we can measure all the elements of a network just like any network. When the price is below the fair value, right? And if that's a stock, it's the discounted stream of future cash flows. If that were a bond, it would be the certainty you have with the payment of interest. Whatever it is, if the price is equal to fair value, you're probably agnostic as to whether to buy it or not. If the price is below fair value, investors will buy to try to close that gap.
Bitcoin is a network, not just an asset. Its value, like any network from telecom to social media, can be assessed through Metcalfe's law, which essentially states that a network's value grows with the number of its users and connections. Yusko cites the work of Tim Peterson from N-Squared Crypto, who tracks Bitcoin's fair value model based on this law. According to Peterson's analysis, Bitcoin's fair value in 2025 sits around $91,000, $92,000. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
The nice thing about Bitcoin is it's a network, right? It's physically, literally and physically a network. It's a network of nodes that secure a blockchain that enables Bitcoin to be a better form of money going forward. And therefore we can measure all the elements of a network just like any network. And I have a buddy in the industry, Tim Peterson, who runs a firm called N-Squared Crypto, and he's N-Squared Value on Twitter. And he's been tracking this model, this Metcalfe's Law model, for years. And based on that calculation, he comes up with a fair value of the Bitcoin network, the Bitcoin blockchain network, at around $91,000 or $92,000 today. And what's interesting is if you look at history, in 2017, that value was 10,000. Now, if you remember, we went from 10,000 in November to 20,000 in December. So we got 2 times fair value. And then we had a big correction and we fell well below fair value until the next bull market started. Then in 2021, fair value had gone up to about 33K. But we went all the way up to 69K in November of 21. And then we had a big correction. So here we are in 2025, same 4-year cycle, fair value at 91. We only got up to 125, 126. We didn't get a full 100% higher. We never hit that 170, 180 that people were calling for. And so I will argue that the correction will be more muted because of that, because it's likely we fall not just back to fair value, but probably below. Well, why should we fall below? Well, corrections occur when people who bought for, we'll say, less than ideal reasons. Like if you think about the cycle of any investment, when the price is below the fair value, right? And if that's a stock, it's the discounted stream of future cash flows. If that were a bond, it would be the certainty you have with the payment of interest. Whatever it is, if the price is equal to fair value, you're probably agnostic as to whether to buy it or not. If the price is below fair value, investors will buy to try to close that gap. Well, as the price starts to move, traders are drawn to it. Because traders don't really care about fair value. They just want movement. They want to go long or they want to go short, and they trade. Well, as the price starts to get above fair value, hedgers emerge. Well, what's a hedger? A hedger is someone who owns a commodity, whether it be oil or gold or Bitcoin. Bitcoin's classified as a commodity, that produce it. And they now say, well, wait a minute, if the fair value is here and I can sell it at a price above fair value, well, I know I'm going to produce it tomorrow, so I'll just sell it in the futures market. And if you can sell an asset in the futures market, you need someone to take the opposite side. Those are called speculators. So speculators are taking the opposite side of a hedger. Well, then that increases the price. Now, when the price starts to really get higher above fair value, now the gamblers come in. And the gamblers not only buy the asset because it's moving, but they use leverage. And leverage is not evil in and of itself, but it's the amount of leverage relative to the volatility of an asset. So what happens is, as those gamblers push the price to too high a level, it snaps, they get liquidated, the price starts to fall. And as the price starts to head towards fair value, the traders get nervous, so they sell, and the price gets down. The hedgers can't sell because now the price is below fair value, so they'll just hold it until the price goes back up. And then the long-term investors wait until the price gets down here and they start buying again. So you get this natural cycle.
Yusko then contrasts Bitcoin with gold, emphasizing how institutional players manipulate commodity futures markets through spoofing, placing large orders designed to move price, then canceling or reversing them. Firms like JP Morgan have even paid huge fines for such behavior. Gold's massive size and mature market lead to less explosive volatility than Bitcoin, but also more systematic manipulation.
It's highly likely, Giovanni, that we don't have the same extremes, either up or down, partly because the amount of leverage that people can use has diminished, right? You can't get 100 to 1 anymore. You can get 50 to 1 in some places, and usually it's more like, 4 or 5 times. So if the leverage is less, you won't have the extremes. The reason gold doesn't have as much volatility is it's harder to lever. It's a more mature market. It's much larger, right? It's 10 times bigger than the market of Bitcoin. I mean, gold lost a whole Bitcoin in 2 days the other day, right? I mean, it lost 2.8 trillion in 2 days after going up 10 trillion a year to date. And so the law of large numbers says that you're not going to have the same level of volatility because you can't get the same amount of leverage. There's just not as many people that. The second thing is, gold has been a commodity longer than Bitcoin. And what I mean by that is there's a reason Bitcoin was labeled a commodity, not a security. And it's not a good reason, actually. It's intentional. Anything that's a commodity can be manipulated by the largest players in that commodity through the futures market. Well, that's a process known as spoofing, where the big guys, JP Morgan and Goldman and all these other guys in Europe, they are selling futures to compress the price, and they are day trading around it, which is technically illegal, and they pay fines. This is the crazy part. 2 years ago, JP Morgan paid a $940 million fine, almost $1 billion fine, didn't have to admit any wrongdoing. Commodities and futures markets tend to have this rapid movement. That's a short squeeze. Because when the price is being manipulated, you got all these shorts, they're naked, and somebody starts to buy, whoever that is. This time it was China. China started buying gold. Well, now gold went into a super short covering. So all these guys, JP Morgan, they're having to cover their shorts, and we went from 3,400 to 4,400 instantaneously. Okay, well, now what's happening? Now they're back to shorting again. So now they're not shorting at 3,400, they're shorting at 4,400. And we went from 4,400 all the way back down to 4,000. And so it's that constant process of, spoofing, punctuated by these big short covering rallies. And again, this is that distribution. You got the OGs selling into it for the first time, which is good. We want that. We got fewer new buyers. We still have some, but we have fewer new buyers. And we've got the constant downward pressure from the futures market that's kind of capping prices. So, I think we're going to be stuck in a kind of squishy zone for a while. I don't think we're going to have a massive correction like the last 2 cycles because we never got super overvalued. Do I think it could go down into the 70s? Yeah. I think we're in crypto winter. I do. And I know people don't want me to say it, but I think we're in crypto winter. But I don't think it's going to be severe. I just think it's going to be a more mild winter. If your average is 100, okay, what you have is a savings asset. You don't have a speculative asset, I will argue right now. The chances of making a quick buck on 100,000 from here, I think are pretty low. I think the likelihood that we get to, $500,000 in the next cycle, I think is really high. But that's 4+ years away. So what I think people should do, so I was on TV in 2018. And while I was on the show, literally, and I was on the show for like 6 minutes, but while I was on the show, the price went from 10,000 to 8,000. So it was a big move, right? And the host says, well, what should we do? I'm like, we should buy it. She says, well, you would always say that. And I'm like, yeah, I would. Buy it today, buy it tomorrow, buy it next week, buy it next month. Don't buy it all at once. Figure out how much of your portfolio you want to own. Buy some today, buy some next week, some next month, the month after, and keep accumulating your savings bucket, right? Don't put the money that you need to pay the bills into a volatile asset. Stocks, bonds, anything. I mean, that you need that to be in money that you can spend. But if you want to save your value and protect it from the ravages of inflation, you should be shifting as much of your savings bucket out of fiat into Bitcoin.
Yusko believes we are in a crypto winter, but a mild one, potentially drifting into the $70,000 but not collapsing. Importantly, he sees Bitcoin transitioning from a speculative trade to a savings asset around the 100K region. Looking forward, Yusko is confident. While Bitcoin may not deliver fast gains from here, he believes the next cycle could legitimately reach $500,000, but that timeline is 4 years out. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.